Hello, 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 hello. Good evening. Yes, I will be. Go. What's up, man? What's going on? I actually Fed news in detail, right? Especially not the last session. I would watch the last two because I go in detail what Renkos is about, how to get it, why you would want to start looking at it as opposed to candlesticks. Very, very important. I'm not gonna get all the way into the beginning today, tonight. Again, I actually have somewhere to be. So every again, candlestick has. When you're looking at now, Renkos, my a lot of you guys, I'm getting a lot of messages. A lot of you guys been loving it. I'm glad. Some of you guys been making a lot of money. Um, it's been awesome, and I'm glad that looking at the market from a different perspective has allowed you to yield some great profits and make your trading a lot profitable and easier. All right, I recommend it. Again, you can get Renkos when you upgrade your trading view. There's also a way to get it on your MT4. Once I get that, I will let you guys know. Right, there's like a special way to put your Renkos on your MT4. But for now, I would do it on your trading view. I would get a pro account. It's worth it. If you take trading seriously, you would really want to invest in this. Because if you don't have a pro account, you can only go as far as time frames. You only have the monthly, the weekly, and the daily. You can't go down to the smaller time frames. And you're gonna need the smaller time frames if you're gonna mess with Renkos, right? Last session we talked about moving averages, EMAs, and SMAs, the difference, how you can utilize them to get cleaner and better entries. The difference between the two: EMA factors in price a lot faster than SMA. SMA factors in price a lot slower, right? So, but you can use the two to your advantage, especially when prices crossing over, right? We talked about the crossover. So, very important. Again, if you want to get more in detail, you can watch my last few sessions, my last three, specifically my last three. I go over this because next week we're going to start going over Fibonacci, right? We start piecing all of this stuff together, right? So if you notice on all these crossovers, right, you got nice clean moves either to the upside, to the downside, all right? Again, and when you zoom in on a smaller time frame, um, they help you get cleaner and tighter entries, right? So let's say entry here, stop loss there, and as you can see, you got a nice clean move to the downside. All right, so let's get to the markets. What you guys need to watch out for the rest of the week. All right, I'm expecting a reversal on the DXY. This is not coming down aggressive, right? I was looking for here before it shot up. So if you're gonna get in a sell, all right. Euro subject, right? And I can go on and on and on. And I know how much you guys would love it for me to be on IML TV all day, but unfortunately I cannot. So, how based on what happened. See these flags? See these flags? All the way back up to this top. All right. And this is how you want to catch the move. So, right there, you got your impulse, you got your flag, you got your continuation. You're getting another bullish flag. So how you want to play this, if you're trading on Renkos, so quickly let's go over Renkos right here. All right, so clearly on the 1 hour on candlesticks, as you can see, you got a flag forming. But when I go over to Renkos, it's just one Renko bar going up, right? So I need to find the flag pattern on Renkos. So what you do there is you drop down smaller time frames until you see that flag, like a flag like this, right? Or you see these flags, see these flags, see these flags, right? So you drop down to a smaller time frame until that flag shows itself. So all right, I'm on the 15-minute. Now I got my flag. So now what I'm waiting for is that reversal. So again, based off of this, I'm looking for, we're already in an uptrend, right? Look at my MACD. So price has already gone up. As you guys can see, we're already in that uptrend, right? We're already above the histogram. As long as we're above the histogram, we are in an uptrend. Even when this was going down, you see that was the flag pulling back. As it went up, that was your impulse here. So now what you're looking for is this to come back up to the top, all right? And then again, if you factor in your moving averages, whatever it is that you use here, you'll got a nice setup, and then you're looking for a buy. So right here would be a good, nice buy setup. Place your stop loss below your entry, previous low, and then you're looking for this to go back to the top, all right? So flag pattern all the way back up. That's your move. Bullish flag for a buy. Alright guys, bullish flag for a buy. So expect the DXY this week to continue getting strong. Bullish flag for a buy. Next up, so the Euro USD. How it moves. Perspective is important. 1 minute, none of that, right? Lost on your smaller ones. So opportunities right here, right? This was my, I want to make sure that you guys are, these wicks where price hit these previous highs, these lows. Well, what I see the market doing, especially for the DXY, I see a fake out happening to this high before we get this down move. All right, before we get this down move. So I'm expecting a weak dollar long term. All right, I'm expecting a weak dollar. But before that happens, before this reversal happens, we're gonna get a fake out. We'll definitely get a fake out. And if you notice here, right, and I highlighted these points for a reason, right? See what happened here? You see what happened with these wicks? I'm going to show you a trick. All right. Now, for anybody who has Renkos, right? Let me boom. Let's do this. For anybody who has Renkos, and you can use this to your advantage. All right. This is a little trick here. This is what I like to do. All right. What I like to do is, what I'll do is, when I see extreme wicks, like big long wicks like this, especially in key areas, supply, demand zones, right? Areas of buyers, sellers. So this is areas of sellers, supply. What I like to do is I like to switch over to Renkos. And the reason being, I'm going to show you. So right before, let's say I would have bought in this area, again, I marked this up on the daily time frame, right? So I saw those extreme wicks on the daily, right? I was on Hakachi, right? Even if I would have saw this on candlesticks, still would have been there, right? You still would have had those wicks. See that? Wick there, wick there, wick there, all those fake outs right here. So what I like to do is I like to switch over to Renkos. And I'll go basically on a smaller time frame. Preferably 15 minute, 5 minute, right? That's the preference because I want to catch the move early. And you see here, right? See those areas that are marked up on the daily? You see here? Now let me remove this so you guys can clearly see it. If you notice, you got wicks in those areas, right? So kind of like when I tell you guys, hey, look for an impulse or correction, right? When it comes to these spots, what you're looking for is a brick with a wick. And if you notice with Renkos, you don't get them a lot, right? You don't. If you notice with Renkos, you don't get a lot of bricks with a wick, right? This doesn't have wicks. This doesn't have wicks. That's why Renkos is so cool. That's why I love them so much, right? That's why I love them so much. The brick with a wick, right? So once price came into this area, right? This demand zone right here, right? Notice the bricks with the wicks, and then you start to get the move to the upside. So when price came back in that same area, guess what I'm looking for? Let's go back to that same zone. Voila. Down there. Zoom out. And this is important because right here, see the bricks with the wick? Right there, literally brick with the wick. Boom, led to the move to the upside, right? Now, I want you guys to keep an eye on this, right? Now, I normally do this on the 15-5 minute, because again, with Renkos, it takes a lot more time to produce, right, price, than regular candlesticks, because Renkos doesn't factor in time, right? Like you can have 15 minutes, right? In the next 15 minutes, price could just be sitting right there. Price could literally be sitting right there. Now, some of you guys are probably already going to jump and say, well, Steve, I see a brick with a wick right here. Should we jump in for a sell? No. Why is that? Because we haven't reached that extreme high just yet, right? This is what we're looking for. I'm looking for price to come to this high, right? So we still got one more move to the high before reversing. So I don't want to jump in just yet. So these bricks with a wick, and what I like to do is once I start seeing them form, especially after a big trend in one direction, that's letting me know that price is getting ready to reverse. price is getting ready to reverse. Now, you can't just do this on any time frame and at any place in the market. My suggestion is extreme supply and demand area, right? So this is like a key point. I want you guys to understand this. And I'm going to show you on a couple trade setups, right? Especially on a lot of the Great Britain pound pairs, how this works. So somebody said they took GA and GN, right? Made some big money. So check this out. We talked about this on Sunday, right? I said pretty much wait for this flag, right? And then we're looking for pretty much continuation to the downside, which you pretty much got on Monday. So notice when price was coming up, right, started waking out, came near this trend line here. Actually, right around here, you started to have your zone areas, right? This is the time I like to do is, and this is my little trick right here, I will switch over to Renko's. So I had two things going my way, right? I had a ascending channel, right? I was coming up near a supply zone, right? I was still in a downtrend, waiting on this pullback. So now I'm just waiting for that reversal, right? Now, if I'm looking at candlestick, I got to wait for the crossover. I got to wait for price to break out of this. But what I want to do here is I want to switch over to Renko's now. Now, when I switch over to Renko's, this is the key. I want to see that brick with a wick. See this brick with a wick? Boom. So my entry would have been on the next brick, selling all the way down. Now, here's the thing. If I'm entering here, where's my stop loss? My stop loss is above the previous high, right? But this is on the 4-hour. I don't want 113 pips stop loss, right? That's too big, right? So again, I want to come down a couple time frames, right? So my rule of thumb is what? 1 or 2, right? Based on candlesticks. Now, Renko's, I come down 1 or 2 time frames. On this 1 hour, I don't have a brick with a wick here on the 1 hour time frame, right? So I want to move down again. Now, this is where the 15-minute really comes in handy, right? Boom. I have 2 opportunities right here, right? This was my ascending channel that was forming, right? Pretty much right around these 2 supply zones, right? My supply zone was right around here, at the top here and right around here. Now, I'm looking, once price gets into this area, I'm looking for a bearish reversal. Bearish reversal brick, and most importantly, a brick with a wick, because that brick with a wick is going to let me know price has exhausted, and that's where I want to place my stop loss. You see, if I would have entered on the 4-hour, right, and you would have still made money, my entry would have been right around here, right? On that 15-minute, with the brick with a wick, my entry is right around here. And most importantly, my stop loss is right above there, right? See? So now I just took a 113 pip stop loss, and now I just reduced it by about over 70 pips, right? Because risk to reward is very, very important, right? You don't ever want to risk too much when you're trading in the market. Now, let's say you do happen to stay on the 4-hour time frame, right? Let's say I do stay on the 4-hour time frame and I still make my entry here. The beauty about Renko's, again, I'm not placing my stop loss all the way at that previous high, right? Which would have been about 131 pips. I'm not doing it. My stop loss is going to be above or below the previous brick with a wick. So if I'm entering here based on the 4-hour, my stop loss is right above here, right? And this is one of the tricks I do to always minimize my stop loss. So look, I still entered on that 4 hour because I got a strong confirmation. At the end of the day, the higher the time frame, the stronger the confirmation. So if I get a 4 hour brick with a wick, right? And let's say I still want to utilize that time frame. Instead of my stop loss being all the way at this high, it's going to be above that previous wick, that brick with a wick. So my entry would have been right here, right? Just like down here, if I was looking for a buy and I would have entered right here, my stop loss is right below that brick with a wick, right? So same thing, 4 hour, I could have still taken this, right? Because that's just a higher time frame. I got a brick with a wick, but instead of entering here and then stop loss all the way up here, because nobody wants a 100 pip stop loss, I just utilized the smaller time frame, and now boom, I've reduced it, right? You see how right here, let's erase that. You see how right here I had a strong brick with a wick? I'm just using this as an example, right? Overall, we're still in this downtrend. If I go on the 15-minute, again, 4 hour entry there, 15-minute. I don't want to enter here, right? If I'm entering here, I don't want my stop loss all the way down here. That's too big. Entry there, stop loss all the way down there. That's 121 pips. Since this is going on an uptrend, I already got my MACD crossover, right? All this strong confirmation, strong confluence, utilizing the smaller time frame. So I use the higher time frame for my confirmation, but now I go to a smaller time frame to get my tight stop loss. And now my stop loss is right here, as opposed to this 4 hour down here. 4 hour down here, 15-minute right there. Got my entry there, 15. So instead of the 121, now I only got 37, right? 37, 184, that's a good risk to reward, right? Same thing on that GN. See here? So if you think about it, same system applies. I got my crossover right around here. So let's say my entry, even if I would have been late, let's say I didn't get it at the top here. If I'm entering right around here, my stop loss isn't all the way up there. See where that wick is? My stop loss is right above there. And that's perfect because here's the catch. If I'm able, again, because Renko takes up so much price, right? Renko takes up a lot of price. Renko's is not, like candlesticks, 5-6 pip movements, unless you're operating on like the 1 minute time frame. So this isn't bad. I'm risking about 39 pips. It's a lot better than 160 pips. And then you still got your basically 280 pip move to the downside. All right. So that's a trick that I use. So I know when I go to sleep or when I'm out running about doing whatever, if I lose the trade, I truly lose the trade. If I don't, then I know it's going to pretty much 9 out of 10 go my way. If anybody who uses bounce back, right? I was talking about this last night. I called the trade earlier for Euro JPY, right? There was this impulse, and then we had this flag, right? Notice, right here, the bricks with the wick. Bullish brick with a wick. So when I entered, and I got back above here, right? My entry was here. My stop loss was right around there. Right? Go look at my notes on bounce back. Notice my stop loss was around 120, 740, 742. There was a reason for that. This is the reason. And then I had my move to the upside. Right? Was only looking for about 20, 30 pips. Right? So just to go to show you This is my reasoning, and this is why and how I'm able to reduce and keep my stop losses very low. So tomorrow, when news hits, right? What we want to see is, again, right now, this is not ready. So if you're looking to buy like Euro, USD, odd, all the majors and everything, I would hold off because as you guys know, we always get fake outs, especially with big news event. There's most likely going to be a fake out. I wouldn't be surprised. And you got to look at it from a higher time frame. Downtrend is not ready yet, right? So if you're operating on the 5 minute, 15 minute, 1 minute, and you're trying to sell now, no, I wouldn't do that. There's a good chance price will hit this high, right? Fake out here, stomp out all the people who are jumping in, have their stop losses here before dropping. What you want to look for is bricks with a wick right around here. Once that happens, just like this, right? Kind of like this, now you can look for yourself. All right? Does that make sense? Does everybody get that? Understand that? I don't really like to take trades on my phone. I like to be at a laptop or a PC so I can see everything clearly. I don't modify anything on my Renkos. All right. So my Renko settings are default. I don't change my ATR if that's what you're asking for. Just Renkos, as you saw. I just switched from candlestick to. I don't modify none of my indicators. Nothing. Not Fibonacci, not my MACD, not nothing. All right. I don't modify anything. It's about properly utilizing it the correct way. All right. So red brick with a wick, green brick with a wick. Yes, that's what you're looking for. So everybody understand that. Again, it should have been really clear. No confusion there. And again, you guys can use this to your advantage. So some people have told me, Renkos is a little difficult for them, right? No problem. Even if you just use it as your for your stop loss, I think that's great because honestly, that's what I do, right? So that's a strong tip right there. So on all these Great Britain pound pairs, right, a lot of them dropped, right? So as you guys can see, on Sunday, I was looking for a flag before it dropped. Did it create the flag? No. Did it create the flag? Not really. It barely pulled back. So this was a trade like, unless you were trading on like the 5 minute, as you can see, even from a MACD standpoint, we never even got a retest. Price just dropped, right? What I like to do is I like to switch over to Renko. So when I do get in for a sell, right, I'll go on the 15 minute. And the reason why the 15 minute, the 5 minute, they're going to show a lot more wicks than the higher time frames. That's number one. And number two, I don't want to use a higher time frame because, for example, if I use, let's say, this brick with a wick, right? Let's say I get in on the perfect entry, even right here. Again, I'm risking a higher stop loss. That's still 108 pips. Look at that. I caught that perfectly, and I still got 108 pips. By going down to a smaller time frame, right, you're reducing your risk. So what I would have done is, on Sunday, right, when we were looking for the market, that was pretty much the 28th, 29th. Yeah, that was right around here. Once one of these red bricks with a wick would have formed, my entry would have been probably somewhere around here, and then stop loss right around there. Now, look at your risk. Would you rather risk 108 pips, or would you rather risk 22 pips? And here's the thing. I'm okay with a 22 pip loss. What I'm not okay with is a 100 pip loss, a 50, 70. I always try to keep my stop loss 30 pips or lower. Because you know why? One, I'm not going to be in a crazy drawdown. You're in a crazy drawdown once you hit 50 pips and more. You start 50 pips, you're like medium. It's like, all right. Once you get to like 70, 80, that's when you're like really in trouble. So my thing is, and one of my goals for like 2019 was to really minimize my risk by any means possible. So one trick that I use is I like to use the smaller time frames, especially on Renkos, because they'll let me know. You see how many times? Every time I get a brick with a wick, it's letting me know. So if I would have entered here, this is where my stop loss would have wanted to be, right? If I enter somewhere around here, for example, let's say I got in the market somewhere around here. Yeah, my stop loss would have been there. So this is based on the 15-minute. That's still too high, right? That's 81 pips. So if I wanted to reduce that, I'm going to go down to a smaller time frame. Now I'm on the 5-minute. So instead of from all the way to up here, do you see all these bricks with a wick? 1, 2, 3, 4, 5. See what I'm saying? So now, instead of that 80 pip, now I only have my entries there, right there. Now I only got a 16 pips. Max 28 pips. A lot better than 82 pips. You see, one of the things I always do when I take a trade, I want to feel good about what I'm risking. I want to feel great, more so than my target, right? Remember, what's your first goal as a trader? First goal as a trader. What's your job as a trader, guys? What do you want to do? What are you looking to do? That's the goal, right? As an investor, and here's the thing, you guys got to start switching your mindset from the end goal is to make the money. The goal is, yes, risk management, protect your money. Protect your money, right? That's the goal, right? As an investor, and here's the thing, you guys got to start switching your mindset from I just want to make money to from a trader, because a trader is somebody who really like trades every day. And I know a lot of us, we trade every day, but you really want to turn into an investor, somebody who's I'm investing in every position that I get into. So the job of an investor, even think about it in your everyday life. Some of you guys, you own a house, you buy a car, you got like that's an investment, right? So the goal is to protect your capital, to protect their capital. And a lot of traders, what happens, they do a bad job protecting their capital. And the reason being is more so they're looking already at the profits and not realizing what they're risking in the market. So if I go in, let's say, for example, we just had odd news. And I'm sorry for jumping all around the place. I'm going to get into the charts very, very shortly, right? So check this out. I'm on Euro odd, right? So look at this. Right before, right around when news was hitting, I had a brick with a wick, right here. So once this brick with a wick formed, even with the news that was happening, I have a tight stop loss. I'm risking 13 pips right when the news hit, and price dropped about 30 pips. Right? Not the greatest risk to reward, but still good, right? You risk, again, 13, maybe 14, 15, 17, whatever, right? But your reward is so far dropped about 34 pips. Right? Right when the news hit, that brick formed, and then you got your move to the downside. Right? It's minimizing. So if this went back up and have taken you out, you know in the back of your mind, all right, let's put this in perspective. Let's say I put a standard. I lost only 130 bucks, right? Depending on the pair you're trading, right? Because some, 10 pip moves, even though you have a standard on it, is not equivalent, right? Some pairs pay lower than others. But let's just say 13 pips, 14 pips on a standard, only 140 bucks. That's a lot better than a 50 pip stop loss or 100 pip stop loss in that same standard, and it goes the opposite way, and then you lose 500 bucks or $1,000. All right? So, let's go back. Again, with the DXY, with big news, and you already see it, right? So that's why I said don't start selling now. And a lot of people get caught up in the smaller time frame because, again, like I've explained a million times, the the market, especially if you're factoring in other things like indicators or whatever, it'll have you jumping in and out more often than you need to be, right? So again, stay to the higher time frames. So what's happening on the higher time frames? I see a fake out happening tomorrow, right? Right before news hits. Right? You don't be surprised even during London session, you guys see that happen, right? Fake out around these highs. I wouldn't be surprised if price breaks it, right? And then drops. All right. So this is what you want to be on the lookout for. All right. Let's go on 4 hour. So you're getting a pullback right now, probably a small flag, and then continuation up. All right. So quick tip there. That should help out a lot of you guys, especially with trading tomorrow. You definitely want to be on the lookout for that. So small bullish flag forming. And then you want to watch the top. Definitely watch the top. So if the DXY drops, right, we're expecting. So if the Fed cut happens and then we get a DXY and price ends up dropping, that means a weak dollar. So that means all the majors are about to go on a strong bullish run. All right. And if you notice, outside of the Great Britain pound pairs, right, to start off the great week, market's been a little slow. We haven't really seen a lot of movement, right? So we're going to get to that. We're going to get to that. So look where a lot of price is right now. Again, depending on what happens tomorrow, this is going to set the standard for the next couple of months. Definitely for the month of August. We can definitely get that here. Now, again, we still don't know yet, depending on how the market is setting up, and that's why it's important to really wait for and see what price does. We can still get one more move down, or we can get an explosion to the upside, right? Long term, no matter what, I still got this coming up, right? The structure is already being made, right? If we look at the weekly time frame, look at this. You see how this was a nice clean uptrend, right? See this downtrend? Does this downtrend look like this downtrend? See how that was a downtrend? See how that came down? See, look what this is doing. This is going to reverse. Sooner or later, that's going to reverse. All right? But for now, for the immediate time, again, what we want to see is we want to see a bullish breakout. If that happens, if that doesn't happen, don't be surprised for one more move down, right? Don't be surprised. See where these wicks are? Price faked out before going up. Don't be surprised. Long term, you're still looking to go up. But this is what I don't want you guys to do, and this is what a lot of people do. They start trying to buy and sell the moment news comes out. Remember, when news hit, the market is fluctuating up and down. Like you see this wick right here? See what happened here? This is classic news event. Price shoot down, price shoot up, pulls back. This is the type of movement that gives a person anxiety. Like drives their average person crazy, right? Right? Some of you guys are going to be in your chat group, sell, 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 price pulls back and then goes up. And then you're going to be buy, 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 and then price pulls back. Yeah, you don't want to do that. All right? If you're that nervous about the news, then like I always tell everybody, stay out, right? Unfortunately, I'm not in your group chats to guide you or anything like that. So I'm giving you advice and the best way to watch the market, right? Like long term, what is price trying to do? If I know long term price is trying to go on an uptrend, then I'm trying to catch it in the best spots possible. So I got a potential flag that's happening on Euro USD. So based on these lows right here, I would want to look to buy either down here or wait for this to break out over here. but I'm not trying to get caught in the middle and then have a move like that mess me up. That's what you don't want to do. It's either one or two things going to happen. Price is going to pull back, hit these lows, and then I'm going to look to buy from the bottom, or I'm going to get a bullish move, break out of here, wait for a small flag, and then look to go long. All right, so watch for a buy down here. That's what I would do. At the end of the day, you always want to wait for the market to come to you. Don't ever chase the market. Great Brain USD. Great Brain USD drop all Great Brain pound pairs, dropping like crazy, right? Dropping like crazy. I see price coming down here. So again, so far we've looked at EU, GU, right? It looks like the dollar can just keep gaining strength. Once again, I'm looking for price to reverse at that top. Doesn't mean it has to reverse at that top. Price can break above here and then keep going, right? Price can easily break above this and keep going. Don't forget your training. You still have to see a strong impulse from this level, right? Just like from here, we had an impulse, you got your flag, and then you got your move, right? I would rather sit there, let the move come to me, than trying to guess and say, oh, price is going to hit there, grab my my sell limit, and then I'm just looking for a reversal. I'd rather be safe no matter what. I prefer confirmations. I can't tell you how many times I watch traders lose because they think price is just going to fake out there and then go the opposite way. What's to say that price won't keep driving, the market won't keep driving price in that direction? That's why I always tell you guys, wait for that impulse, that correction before buying or selling. So with GU, I can easily see price coming down here, right? Before potentially reversing. Now again, one or two things gonna happen. It's gonna keep hitting the floor, or use tomorrow and do a nice correction, right? Now you might not get the perfect correction. Again, with the news, you might just get a whipsaw. Price just fluctuates up and down. Don't get bothered by it. You overall tomorrow, you want to see the overall direction of what price is trying to do. Because what we're trying to do is we're trying to set ourselves up for the month of August. Month of August and September. Once we get the overall direction of what the market is doing, then guess what? We can grab positions and hold long term. If the DXY shoots up and gains strength, then guess what? I know we can start holding these sell positions all the way to weekly, monthly lows. If price is going to reverse, then I know all we can do is get into these positions, great positions, and hold for 2, 3, 400 pip moves. Just like you guys did with these Great Britain pound pairs, right? See how we set up for that? See how that person was able to 20 times their account? Because we set up days in advance, right? We prepare, all right? We don't want to go in tomorrow and trying to make $1 million. I know that's going to be some of your guys' mindset in here. You're going to try to make $1 million, and trust me, you will get hurt that way. You don't want to do it. Your focus be, all right, while all this activity is going, overall, where is the market trying to go? That should be your mindset. Right? Wait for that before selling. Actually, let's take that. All right. Wait for a bearish flag. So watch the 1 hour, 4 hour. All right. So by tomorrow morning, we should have some idea of what type of pattern this is creating. If we're not getting something like this, some type of bearish flag, and during London session, price just starts to move aggressive. Before you buy, right? We want to see like a bullish flag around this area before buying out, right? Identify something before buying or selling, always, right? I preach that all the time. You can't identify a major sell, supply or demand zone or pattern you recognize. Don't buy or sell. If we get the rate cuts, then bullish dollar, then that's not a problem. Again, if that happens, listen. At the end of the day, I'm gonna be honest with you guys. I could care less. Honestly, I could care less whether the U.S. economy strives or not. We're forex traders. The beauty about what we do, we can profit off of any market. That's why I like forex, right? When I used to invest in like stocks, that means especially U.S. stocks, that means the U.S. economy has to thrive. So if the U.S. economy is not thriving, even though I was like, let's say, invested in Google, Apple, or whatever, stocks just plunge. The thing about forex, we don't care whether the market goes up, down, doesn't matter. You can profit anyway, right? Unless some of you guys have, personal interests in the economy surviving, right? Like I don't have a family like that. Like, well, I like my own kids. I have family, but I don't have kids. Like, so for me, it's not like, oh man, if the economy crashes, how I'm gonna take care of my kids. Like me personally, I could care less. Price goes up, I'm making money. Price goes down, I'm making money. I just need to understand what we're doing, and then I get in on the ride. That's it. That's all I care about. Right. So yeah. Odd USD. All right. So same thing. So this is really just one strong impulse here. So again, I wouldn't be surprised tomorrow with the news after such a strong move. I wouldn't be surprised if I see something like this. Like I would not be surprised. But again, that doesn't mean that I'm gonna go long. I'm gonna start going bullish, right? I still gotta be able to see, like, if I get that impulse coming up, I need to see that flag before continuing to buy. All right. So right here, bearish flag. Actually, I don't even need to copy that. All right. You're still waiting for this, right? So most of you guys will be watching the 1 hour time frame, right? You're getting it now. You see, and again with odd news, you're gonna get a lot of whipsaw candles. Price shoot up, price shoot down, price shoot up, price shoot down, right? Don't be so quick to jump in, right? Odd news just passed an hour ago. I didn't care. I knew price came down so much it had to retrace, but I wasn't so geared to let me just jump in for the buy. Let me wait, right? Let me get a nice bullish flag, and then I look to buy. Once everything lines up, then I buy and sell. I'm not so geared on just jumping in the market because that's what the price will do a lot of times. It'll just retrace. All right. You want to be able to identify something that you know. So wait for that bullish flag before bearish flag before continuing to sell. Yes, it can. Great Brain USD can definitely drop down even more. Absolutely. And if that happens, no problem. I'll just be watching that weekly demand zone, right? So on that Great Brain USD, right? A lot of these pairs they're hitting weekly lows. So again, Look where price is at right now. I believe between here and here, right? With all this movement and market, between here and here, somewhere in between these two zones, price will start to retrace here, right? I was looking for this because of this big move up. Price broke through it, no problem. So we're at the next zone. These two levels right here. And then somewhere around these two levels, price will retrace, right? If price doesn't retrace at one zone, it's going to go to a next, right? And all we want to do is, just like we had all this wick movement right here, like I said, if I switch over to Renko's, and this is where Renko's comes in very, very handy. See, a brick with a wick, I just need to see that over here. I'm not going to watch it on the weekly. I'd probably watch it on the daily. See that? Brick with a wick? That's going to make me very comfortable. Notice when this brick with a wick formed, notice how my MACD started to shift. And then my big uptrend began. I'm looking for that, right? So I got to find it. If I'm watching this on the weekly time frame, I got to find that brick with a wick on one of the smaller time frames, right? So since that's a weekly, I'd probably watch it on the 4 hour. So you see here on the 4 hour, right? So again, and this is the trick. So if I enter here, right, after this brick becomes solid, right? Like you guys saw on the weekly, you see how these bricks, they're not solid. And this is where some of you see how this is purple. That means it's not a fully solid brick yet. That's saying that price can at any moment turn around until it becomes a solid red. Once it becomes a solid red, once this one, then I can get in on the next brick. So on this 4 hour, this is what I like to do. Here's a trick for you guys, especially when it comes to the stop losses, right? Again, so if I get in here, perfect. Now, what most people would do is, again, stop loss below that wick, but that's a big stop loss, right? If I go all the way down there, that's over 129 pips. I want to use a smaller time frame. So what is this? March 15. So I'd probably go to the 30 minute or the 15 minute, right? Like I said, probably the 15. Oh, I want to zoom all the way right down, but let's go back to March. Show you guys this example. So right there, and let's zoom in. And it's gonna help a lot of you guys, especially trading. So on that 4 hour, that was where my entry was, right? Ugh. All right, so my entry would have been right around here, right? So if not on the 15 minute, probably on the 30 minute, there would have probably been a brick with a wick. But instead of my stop loss being all the way down here, now my stop loss would probably be right around here, below this low right here, right? And notice, price never retested. That's the thing. These bricks with a wick, they're so strong that 9 out of 10, a lot of times price really doesn't retest, right? You didn't get no fake outs because these are strong pullbacks. These are really, really strong pullbacks. So for price to go the opposite of it, that must have been, there would have been a really strong move, especially on the higher time frame. So when you saw that 4 hour brick with a wick, yeah, even on the smaller ones, as you can see, price is not coming back. All right, but I would just go on one of the smaller time frames. There'll always be a brick with a wick, maybe 30 minute, one of them. You can utilize them, and you'll find it. All right, just to show proof. Let's see. Let's do that again. Let me move up. 1. All right. right? Not right around, yeah. So somewhere right around here. And if you want to zoom in on the 5 minute, you can do that. All right. But it reduces the big amount of stop loss. Instead of doing all of that, now you're down around 49. I still wouldn't do 49. I'll find a break with a wick, probably on the, if not the 15, 5 minute, somewhere. And if I'm entering there, my stop loss is going to be somewhere around here. You'll definitely find it. Like I said, the higher the time frame, the less of these show up. So that's why it's good to use the smaller time frames because they're more frequent. All right. Hopefully that makes sense to you guys. And you can use that to your advantage. All right. Let's knock out these charts, these US pairs, and get back to it. So odd USD, we already did that. New Zealand USD. New Zealand had news, I think what, around 9 o'clock, 9:30, somewhere around that. It wasn't strong. So we already got this coming down anyways, right? Had your flag, boom. So when this flag was forming, what I say, go down to a smaller time frame, 30-minute, wait for the retest. Always wait for a retest. Always wait. So you see this, came back over. When it crossed, your entry would have been right around here. Right? Your entry would have been right around here. On this brick, and then stop loss, you could do this, or again, right? I switch over, let me remove this. Let's stop here, my entry right here. Right? Boom. Or, for more confidence, switch over. Right? Smaller time frame, 15-minute. In this case, because I was on the 1 hour, I probably can go to the 5-minute. And then, see that? So instead of my stop loss being 10 pips, now I reduced it to 5 pips. Because now my stop loss is right above that wick right there. If I'm entering here, remember I did all this on the 1 hour. 1 hour, dropped down to the 30-minute, got the retest. So my entry's around here. Instead of all the way at the top, now it's right there. And then I got my move to the downside. Right? It's about reducing your risk. That's what this, if you want to, out of all the important lessons I've done, I would really include this one. Reducing your risk. This is very, very important. This is something a lot of you guys need to do because a lot of you guys struggle on reducing your risk. If you have a small risk like this, 8 pips for 35 pips, take that all day. I'm risking 8 pips for 35 pips. I'll take that all day, every day of the week for the rest of my life. Give me that. Every time I take a trade setup, I'm risking 8 pips. Nobody's going to cry over 8 pips. Nobody's ever going to jump in your inbox if you're calling signals. Even if you're trading yourself, you will never cry over an 8 pip loss. Never. Matter of fact, at an 8 pip loss, you'll get even more reckless with your lot size. You'll start putting 50 standards. Because at 8 pips, that's not going to kill your account, right? Unless you only got like $1,000 in your account. But you know what I mean. Even at a sizable account, some of you guys have a 10, 20, 30K, 50K, whatever. At a sizable account, if your risk is, 8, 9 pips, you'll take those odds any day of the week. And 10 times on Sunday. All right. So New Zealand USD, wait for another flag before selling. All right. Nothing new here. You guys know the drill. All about actually, you just had one, so just wait for a next one. Wait for another one like this. All right? Wait for another one like this. If you get that, especially once news come tomorrow, you're good. All right? Wait for another one like that. Right? This should be starting to come easier to a lot of you guys. If you're paying attention, you're watching these videos over and over again, you're watching other good educators combining all of this stuff, this should be easier. Minimizing the risk, properly waiting for the patterns to set up, waiting for all these things, and then boom. Right? So, all right. Yes. Brick with a wick. That should be a game changer for a lot of you guys, especially with the stop loss. So right here, I like this a lot, right? I like this a lot. USD Swiss franc. And like I said, this is setting up beautifully. I like this a lot. This is a nice setup right here. Flag. Beautiful bullish flag on the 4-hour. So looking for this to come up here next to this zone. Right. We're looking for this right here. This is beautiful. I like this a lot. So you might see that tomorrow. Perfect, 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 perfect. Before you buy. So I'm not looking for a sell. Why, Steve? It's in a sell. It broke my trend line. You know why? I need a bearish impulse first. I need to see this and then this, right? See that? I'm not looking. This still looking like a flag to me. I need to see, you see the impulse, then the flag, another impulse, you see straight. So even when in a selling market, I need to see this. I need this. I need this. I need this. I don't have that over here. So even though my trend line is broken, I don't care. I don't have that until I see a sharp move, a sharp impulse first. Then I will consider the sell. Right now, I'm still have a bullish flag. And the way this is setting up is beautiful. Beautiful, beautiful, beautiful. I like this. So this is the type of move. If this holds all the way up until FOMC, then you know the analysis is right, right? The DXY is going to shoot up, so it's going to continue gaining strength. Euro USD will drop, Great Britain USD will drop. All the perfect, no problem. This is a nice, beautiful. Keep this on your watch list. I would definitely keep this on your watch list. So all I'll do is switch over to Renko's, right? And I would watch this probably 30-minute, 15-minute time frame. And what I'm waiting for is a strong brick with a wick for that reversal, right? Hell, you can keep it on candlesticks, no problem. Just don't watch it on the smaller one, right? Because it'll have you buying and selling. Probably wait on the 1 hour. Wait for that crossover here, right? Wait for that MACD crossover over here. But this is looking very, very beautiful. I like this trade setup a lot. Bullish flag for a buy. Easy. Exactly. First EJ on Sunday, and that's it. The same way. See this? See how this came up, and then this. Right? So if I'm looking at this on the 4-hour, right? I'd go down to the 1 hour or 30-minute, right? 1 hour, 30-minute, and right there. Right? See how I'm getting that crossover here? So now what I want to do is when I start looking for my buys, I can now switch over Renko, right? And to make sure my risk is small, so when I do start buying, right? Notice how this was on a pure uptrend. So you don't get the retest right here. See, the thing is, again, Renko is pure price. It doesn't fluctuate like candlesticks, like Hakanachi. So you would have to really go on like a smaller time frame to get that retest. Right? See how on that same time frame we can get, so see here? So boom. You see how when price retested, like it did here. So technically, you could have started buying the way, you see how price pulled back? See how it crossed your MACD? Look at that. Cross your MACD, look at that. So, haha, right there. Got a brick with a wick. Right? That's just letting me know I can place my stop loss right below it. And if it goes, it goes. If it takes me out, I just wait for the next setup. Boom. Right? Price wouldn't have taken you out. Your stop loss would have been here. Price never came there. That could have got you another entry. And then the important one right before takeoff, right there. Right there. Right? Right there. Stop loss right below it. Move to the upside. Right? Same philosophy, same system. Brick with a wick. Right? Came back, retested. That was your brick with a wick. Brick with a wick. And then take off. See how on the 15-minute, there was a brick with a wick here. But on the 30-minute, there's none. So that's why I said you got to watch what time frame you're utilizing. If you're on the higher one, you don't want to drop down too low. So this was a 4-hour flag. 30-minute, perfect. Brick with a wick. Entry here, stop loss right below it. You're not risking too much. So I enter here, stop loss right there, 13 pips. Nobody is going to cry over 13 pips. I enter here, stop loss right below it, 13, 14 pips. And you caught about 80 pips to the upside. That's a great risk to reward. Wait for the same thing over here. Right? You're getting your pullback now. So if you get another brick with a wick, perfect entry. Look for your move to the upside. All right. But this is a great trade setup that you guys should all be looking at going tomorrow. I like this one, definitely. Everything lines up, I'll definitely be in that trade. USD CAD. And if I'm not mistaken, got CAD news tomorrow. So you see the difference between this, the way this came down, and USD Swiss franc. So this coming down a little more sharply. So if I get a flag here, then I would probably consider looking for myself. We got CAD news early in the morning, if I'm not mistaken, 8:30. See, I only go based on the structure of what the market is giving me, right? Mostly technical analysis. Thing with USD CAD though, it fluctuates a lot, right? It can go one direction and then out of nowhere shoot the total opposite. So you gotta account for that, right? It came out of this descending channel, price came up, right? Price just broke here. Now we want to see if you do get a bearish flag. If you get basically this again, then you could sell. I trade based off of the structure the market is giving me. All right. Only if you get this, then you can sell. All right. USD, JPY. Still like this to go up. Right. See it come up to around 109, right around this area here. Gold. Gold. And again, setting up for this ascending channel. Right? Ascending channel. Don't be surprised. Boom. We just saw it actually this evening with what pair? Euro odd, right? Run that real quick. If you go to 30-minute, right? See that? Bad news, right? Looking for this to come down more. So same thing. Still looking like a flag to me. I need to see. You see the impulse?